And guys, please do not force trades. Okay? If you force any trade, you're the one who will lose your money. The market won't lose anything because you are forcing trade, trying to make profit, even where there was no trade that. Okay, in short, I mean, do not force trades. Here I also saw something. The market was bearish. We only look for bearish patterns, flag patterns, pennants, and the rising wedges. They break to the downside like this. This was a bearish flag. It breaks to the downside. The same applies to the left. You look for areas of confluence like that. You put your shadows on there. Wait for price to come there. Just be patient. Price must always come there. And if it doesn't, okay, just call it that. You should not chase trades. You should not FOMO here. There is no need of FOMO. You wait for price to come to your supply and demand zone. It always does. Most of the time it does. And if it doesn't, you call it, just leave. Just leave. For you, it's better to be safe than sorry. This is the forex market. You cannot combat the market, okay? There is no need of combating. You wait for it to come. Put your traps around this supply and demand zone. You can collect your orders. Then for your stop loss, for those who use stop losses, put it just a few pips above the wicks, like this wick here. You put it a few pips. Let me show you. You'd put it a few pips above that wick like that. Then your TP, as usual, you know, your TP, you do this after measuring. Then you come and place your TP like that. It's usually very accurate. You can see for yourself. It's usually very accurate. That is your first TP. Only take the first TP. Do not be greedy. Take the first TP and leave. There's a lot of other setups you can find elsewhere in the market. The market is generous. It gives and it also takes in equal measures. It just plays with your psychology. They hit you with psychology. Okay? This was if so. What I meant was this. For example, you put your sell limit around this supply and demand zone like that. Your SL will have been somewhere above, like $2.30 for those who used. For example, if I used the one lot size on this true volatility to 51x index, then my TP would have been like somewhere around here, this shadow zone area. I would be willing to lose $2.30 to gain $10.13, close to ratio 1:4.5 there, and that's a good risk to reward ratio. That even, for example, if my strategy was 50% correct, I'd be still profitable most of the time due to the right or the correct risk to reward ratio. Okay, the characteristics are the same for these flags, pennants, and let me say wedges. Okay, and guys, let me do the last one, then we can call it a day. Let me show you. It's just the same. There's nothing rocket science here. Okay, I see something here. Let me try to try and see if it's clear. If it's not clear, then I'll just leave this one. Let make sure it touches only the wicks like that. Here, if you can see, we have a rising wedge. Let me see if it has reached the first TP. Measure the inside like that. Then you come and put it It's almost there. It's almost there. First GP. It's almost reaching there, and it must reach there. It's usually accurate. It must reach there. And if you look at the area of confluence, I said you look to the left. You see, here was an area of confluence here, that place. Let me show you. Here is an area of confluence. The price broke that structure, and it's now coming back to test that area of confluence, what we call the supply and demand zone, and it came back around that region, and it even did touch. If you put your, let me put the horizontal one so you can see. It came back to that point and touched it left a wick that touched that supply and demand zone before going to the downside. Imagine if you put your sell limit. Let me show you. If you put just your sell limit, you've seen the flag, then put your sell limit around this region. A lot of orders around that region. Then your SL, you put just above that demand and supply zone, above like that. For your TP, you put around this. The risk to reward ratio is very good. Yeah, you'd have a lot of money with just this risk to reward, depending on your lot size. If you have a small account, just use. If you have a small account, use just a small lot size. Be fair to your account, okay? Use something reasonable. Do not be greedy. Greed is what kills a lot of people in this line of business. And guys, remember to subscribe. And again, I ask you, help me reach 10k subs. I'll be giving you more forex knowledge. This is just the tip of the iceberg. And guys, thank you for watching. Click that subscribe button. It costs nothing. Just click, hit it, comment. And if you have any question, leave it in the comment section. I'll see it and get back to you. Thank you for watching. Ciao.